Welcome to CFRA Insights. This is where we explore the investment themes shaping tomorrow's market opportunities. My name is Lynn Bachstetter. I head up the Wealth Market Development team, and I am joined by my colleague today, Aniket Ullal, who's the head of ETF research at CFRA. Aniket, welcome.
Thanks, Lynn. Looking forward to our conversation.
So, Aniket, you recently published a note which analyzes 5 notable ETFs that launched in the US in the first half of this year. I was just curious, what prompted you to do so?
Well, it's been a blockbuster year again for ETFs. You know, we've had over 700 launches, which is a lot, and we've had ETFs in the US taking over $1 trillion in net inflows. Just to put that in perspective, if you look at the last couple of years, $500 to $600 billion in a full calendar year was a good year. We were clearly way ahead of that, and I think we expect to break inflow records. But the growth is good for the industry, but from an investor's perspective, it means there's a lot of noise, a lot of things happening, and we really want to be able to help them separate the signal from the noise. And so we identified these 5 ETFs so they can understand what ETFs stand out and which themes they're aligned to.
So when you were thinking about factors that go into picking the ETFs, was asset gathering one of them, and why?
Yeah, that's a good question. I would say we didn't want asset gathering to be a gating factor, but certainly one can't ignore it, and we certainly factored that in when we selected some of the ETFs. A couple of them really stood out on asset gathering. One was Roundhill's memory ETF, ticker DRAM, and it's crossed over $20 billion in assets. In fact, if you rank all the ETFs in the US in the first half of this year, just on flows, DRAM is 6th overall in the US. That includes all ETFs, not just new launches. So it's really a home run in terms of a new launch. And it really stood out because it offered very targeted exposure to the high bandwidth memory industry, which is dominated by 3 players, SK Hynix, Samsung Electronics, and Micron. And there was no ETF in the US that held all 3. And this one offered very concentrated exposure. Over 70% of the fund is these 3 stocks. So it really stood out and it's done extremely well. Of course, now with SK Hynix having an ADR listing, we expect that to be held by other semiconductor ETFs. And the other one that really stood out in terms of asset size is IQMM, which is ProShares' money market ETF. And the way they differentiated that was by, making sure the fund was compliant with the Genius Act, and so it can be held by stablecoin issuers. So DRAM and IQMM really stood out from an asset gathering perspective.
And then in your opening comments, you talked about 2026 being a blockbuster year. So what are the ETFs themes did you see in the first half of this year?
Well, it's hard to talk about the first half of this year without talking about space. Certainly the SpaceX IPO was extremely widely followed and something we covered extensively here at CFRA. A few ETF issuers kind of capitalized on that. Tema ETFs launched a ticker NASA, quite a clever ticker, and they actually got pre-IPO exposure to SpaceX through a special purpose vehicle. So that took in a lot of assets. And we expect that category to grow because as SpaceX grows, the supplier ecosystem for these companies is going to grow as well, which means there'll be more companies available for these ETFs to hold. And the other theme is, as AI continues to grow and have more impact, there's more talk about how that impacts different companies. And so there's been a lot of analysis of what's called the HALO trade, of the heavy asset, low obsolescence companies that will not get as disrupted by AI. And so ticker LOHA, LOHA, is an ETF that taps into the space. I think they couldn't get HALO, that was already taken, the ticker. But certainly these 2 ETFs have been very topical this year.
And can you maybe talk a little bit about what other ETFs you had in your list?
Sure, we had another fixed income one to kind of round out the top 5. This is the iShares Securitized Income Active ETF, ticker SECU, short for Securitized. And, we've certainly seen investors try to reach for yield in this environment, and this ETF holds non-government securitized credit. In the past, we've seen this category dominated by firms that hold only AAA rated securities through, CLOs with the highest kind of credit quality tranche. But this year, we've seen kind of launches of new ETFs like SECU, which hold debt across the credit quality spectrum in order to get higher yield. So that kind of rounds out our top 5 notable launches for this year.
Well, thank you. Hopefully you enjoyed this segment. If you want to see his full note, please visit advisor.marketscope.com, or you could also request access by visiting our website, cfraresearch.com. Thanks for watching and hope to see you on the next one.